What's going on, everybody? TG here, back with another video. Hope everyone's having a great weekend today. Nice relaxing weekend. We got Valentine's Day tomorrow, so that's pretty awesome. But that's not about the topic of this video. The topic of this video is Apple, and why I started up a small position in Apple that's going to continue to grow and grow, especially after I transfer my funds out of Robinhood and into either TD Ameritrade or E-Trade and try to get a portfolio margin account. But that's a different video and a different topic. But we'll go into that in a little later on. But right now, the reason I like Apple so much, obviously, is it's the bread and butter. It's the greatest company in the world, biggest company in the world, proven itself time and time again that it belongs where it is, and it's just a beautiful chart. I mean, you look at Apple, it's such a beautiful chart. But forget about charts. Let's actually go to numbers and why I like Apple so much. This is last earnings quarter. One of the greatest earnings quarters, if not the greatest earnings quarter Apple has ever had. Earnings per share coming in at $1.68 versus estimates of $1.41. That's a huge beat right there. And then the revenue beat, doing $111.5 billion versus $103.5 billion estimate, up 21% year over year. Just again, incredible growth on the revenue side. But here's what I really like as well. Okay, we talked about the iPhones last time in Apple's earnings, and they actually tanked last quarter. I said this is because I believe that people are going to be waiting out to buy the iPhone 12 rather than get the iPhone 11, waiting a couple extra months of not buying it to get that, and I think that's exactly what happened. You know, just a giant beat of about $6 billion, up 17% year over year. Just again, great growth in the iPhone revenue sector. But here's one of the other things I like the most, and it's the services sector. Now, the reason I like services sector is because they have the biggest profit margins out of all the other sectors. You know, when we talk about services, we're talking about the App Store mainly. That's where the majority of the money comes in, but also things like Apple Music, Apple TV, different subscriptions, Apple Fitness. So a lot of great just free cash flow for Apple in that sense. And it's one of the reasons I like it so much. If you guys don't know, Apple for their App Store takes a 30% charge for all people on using their App Store. And it's essentially a monopoly because you kind of have to go through the App Store if you want to get, volume of customers, and that's exactly what happens. So people are willing to pay a 30% in order to go through Apple's App Store, and it works out very well for Apple. So other products as well, such as like the iWatch and their AirPods and different things like that, up nicely, 29% year over year, just incredible growth at that. Along with the Macs as well, it's up another 21% year over year. Here's what really surprised me, the iPads. iPads up 41% year over year. And I think a big reason for this is the stay-at-home economy and people being inside and using iPads more. You're laying down. You don't want to just necessarily use your phone. You're comfortable in your house. You want to use your iPad because you can do both business and pleasure on the iPad. And people like that. People like being able to use both. Whereas laptops, it's not so much. You can't really lay down with a laptop. I mean, you can. It's just not as comfortable. And obviously the gross margin as well coming in a little bit above what they expected. So, just overall great, great stuff from Apple. They also have a ton of cash on hand, $36 billion. That's huge. Went down a little bit. One of the issues with Apple is having so much cash on hand is inflation. That's a big issue right now. So the fact that they have so much cash on hand could be a potential issue, especially if the US dollar continues to decline with more inflation, more money going into the market. But I mean, this shouldn't be too much of an issue considering the fact that it's going to be reflected in the share price, and the share price is going to go up even more as more liquidity gets pumped into the market, with more liquidity being pumped into, people's pockets, and a lot of investors are going to be buying stocks and or index funds, and it's going to mainly be Apple, the biggest and the best. I mean, you look at Apple, the way it recovered from March, it makes it look like it's not even, I mean, look at that drop. It doesn't even look significant really anymore compared to the run-up that we've had. I mean, March 20th, we're down at $56, and now we're, up 141% from then. So obviously it's gone up a lot, significantly more than the other FANG stocks. I mean, Amazon's up 53, Microsoft up 32, Alphabet up 38. So significantly more than the others. But justifiable. I mean, their PE ratio is 36. It's, still pretty low. Obviously higher than normal, but I think PE ratios around the board are going to continue to rise. Since stocks are the only game in town, I mean, bonds are yielding basically nothing now. Interest rates are zero. The only place to really put your money in is stocks. I mean, you can buy real estate, but real estate's at an all-time high right now, and a lot of people are expecting a big correction in the real estate business. So it's really stocks is the only game in town to make money, and I think a lot of people are going to be taking advantage of that and using that. And so when people are buying their index funds, buying stocks, what are they going to buy? They're going to buy Apple. Apple as a stock, as a share price is cheap. $135 makes it very accessible to people. The options are very cheap to buy as well. You want to buy calls or puts or sell anything on it, it's very cheap as well. They also pay a small dividend as well, which helps investors out. You kind of get the best of both worlds and everything from Apple, and I think it's the greatest company in the world as of right now. I still believe that Amazon will eventually take that over, and that's why obviously we're so heavily invested in Amazon, as you guys can clearly see. But I think the main point of this video is if you're going to invest in a stock like long term, I think Apple's your play. I think Apple is, you want both safety and growth. I think you go with Apple. There's no real threat to Apple in any of the sectors. I mean, they have the phones, the services, the iPads, the wearables, like they have all it. And nothing's really challenging it. And nothing I don't think actually will challenge it per se. And I think it's just going to continue to grow and become a more, a company that once you buy one product, you're going to buy them all. All right. I mean, people who own an iPhone, they're more likely to buy a Mac. They own a Mac, they're more likely to have AirPods, wearables, and that's kind of how it does. Apple becomes, basically a family member. You have one of it, and the next thing you have all Apple. And that's what Apple has done. And Tim Cook especially has really done well, focusing on, integrating it into the family life. And he's done an amazing job with that. And so I think that it's going to continue to grow and grow. And, the stock price is going to reflect that. And I could definitely see in a year from now, Apple being around almost $200 a share. So I'm very bullish on Apple. Like I said, I'm going to get a lot more into it. We freed up some buying power, so we're definitely going to use this buying power to buy more Apple. And when I say that, I mean put credit spreads as of right now. Good way to make some good money on Apple, especially if you don't have a ton of money. Like right now, I don't have a lot in buying power, so I use that to do put credit spreads on Apple and try to make the most percent return as I can. So as you see here, we risk $700 and we get $280. So that's obviously a very, very good percent return on investment. So, different things like that is how you yield great results in the market, especially long term. I mean, we're talking a 40% return on investment for that. Obviously, I'm going to continue to add more and more into that, trying to get more Apple exposure and, see where it goes. But overall, I think you can't go wrong with Apple or long-term put credit spreads on Apple. I mean, it's been working out pretty well for us as of right now. We're doing pretty good, as you can clearly see. And, I'm expecting Apple to grow. So if you guys are interested in Apple at all, I definitely recommend making a position in, especially on a down day. If you see, next week Apple takes a hit or something, because it's been stagnant for a little bit, go ahead and pick up a position in it, but I'm not a financial advisor. So, it has risks, obviously, but I think long-term Apple's solid, and you can't go wrong owning it. So let me know what you think about this, and I'll talk to you guys in the next video. Take it easy, guys. Bye.